not sure that I have a single strategy with a larger than 50% win rate. I'm a continuation home run trader. It's just what I found works best for me. I typically trade at a low win rate, but a high risk reward. So in today's video, I'm going to challenge myself to build a strategy with a larger than 80% win rate, and I'm going to take you all along on the journey so that hopefully you can also learn how to build strategies of your own. I think it's going to be a very impactful video. Hit like if you're excited, and let's jump into it. Alrighty, so let's pull out our handy dandy notebook here, and let's start building the theory of this strategy. As I mentioned, this is a very important first step. You must understand what you hope to achieve and the direction you want to choose in order to achieve that before you just start jumping into testing. It's really going to help you out. A lot of people will skip this first step. We're not going to in today's video. So our goal, of course, obviously 80% win rate, and maybe not so obvious, but in the back of your mind, we also want the strategy to be profitable. Anybody can make something win 80% of the time and not make any money. So we obviously want to be making money in the same sort of way. So, I've mentioned this on the channel a lot of times before, but maybe this is your first video, so I'll go over it again quickly. There are two major schools of thought when it comes to trading. There is continuation trading, which is how I normally trade. If you look at the strategy that's trading behind you, this is my normal swing trade strategy. I am looking to buy into strength, and then I'm looking to ride that strength. But those types of strategies typically end up having lower win rates. As I said in the intro, I'm not sure I have a single strategy with a greater than 50% win rate. It's just how continuation trading works is that way. You know, you're going to lose more than you win because you are chasing these stocks. This is a chase entrance, but I trade at a very high risk reward because I chase strength, and then I let that strength play all the way out until it fails. So I trade low win rate, high risk reward. That's how I see the market. But the second school of thought to trading, and one that's going to flip that script, is reversal trading, looking to buy low, sell high, time the bottom, sell into a rip. So our strategy today is going to be a reversal strategy, and we're going to be building a swing trading strategy. We're going to be looking at the daily chart. I think that is maybe just the most applicable way of trading. It's the way of trading that most people are doing. Now, you are going to be able to take some of the theories and ideas we talk about from the strategy we build today and apply it to day trading. I doubt that the strategy is going to one-to-one transfer from a daily chart to a 5-minute chart, but if you are a day trader, you're going to be able to apply some of these theories, so don't worry too much about that. I want to take a moment to pause right here in the video. As I'm editing this video sort of after the fact, I realize that right here from the very beginning, this sounds like it's going to be a lot of work. We're already sort of drowning into a lot of words, and it is a lot of work. Building a strategy is a lot of work. I have spent hundreds of hours coding strategies. I just want to let you know that there is a shortcut. Check out my website, daytradingstrategies.net, where if you sign up for only $25, I'm not charging thousands of dollars for some BS course, anything like that. For $25, you are going to get access to actual technology. All of my strategies, all of my watch list, all of my custom indicators, you're going to be able to access it all for that one low price. Check the link at the top of the description, daytradingstrategies.net, if you would rather just get yourself some already working strategies. We've already touched on this a little, but next I just want to lay out that this is going to be a high win rate, low risk reward strategy. When you are building strategies, it's very important for you to target your goal in that way. Unfortunately, there's no such thing, at least not in a sustainable manner, a strategy that's actually going to work multiple years for you that is high win rate and high risk reward. Of course, that's what everybody wants. Everybody wants an 80% win rate strategy with a 3-to-1 risk reward where you're winning 3 times what you're losing. Unfortunately, that's not exactly how it works. Think of it as a seesaw. When you raise your win rate, your risk reward just is going to come down. Or, obviously, vice versa, which is how I typically trade. So today, I'm going to be looking to tip that seesaw, tip that scale in the other direction. But it's very important for you, once again, to note that before you jump into it, because you want to be building strategies that fit your mentality the best, right? Fit your emotions the best. Would you rather have a high win rate than a low risk reward? Are you comfortable with risking more than you're winning, but knowing that you'll win more than you'll lose? Or are you happy with, losing more than you win, but when you win big? Point that out before you jump into it. That's what we just did here. And last but not least, I'm going to be scaling into positions with this strategy. This is the initial thought I have. Once again, as forementioned in the intro, I haven't built this strategy yet. So this theory may change sort of as we continue working. But for right now, I want to be scaling into my entrances. I just think it's very hard to time the bottom of moves. I think it's very hard, no matter what your strategy is, to go, oh, okay, the stock is going to bounce here. So instead, if we want to have a really high win rate, I think it's going to be much easier if we're scaling 3, 4, 5 times in a row. We'll see whatever works best into our positions in order to help us get that high win rate. So it's time for me to jump in and create a strategy. Now, in today's video, I'm not going to be doing all the coding here in front of you. This is already going to be a very long video. Let's try to not make it an hour long. If you are interested in coding, check my YouTube page, check my playlist. I have a playlist called Think Script Tutorials that pretty much goes over all the basis of how to code in Thinkorswim for obviously completely free. Or if you have any more specific questions about coding, on my website, daytradingstrategies.net, once you're subscribed, you will have access to email me directly to help you build your own strategies or to answer any coding questions you have. So once again, I'm going to cut away. I'm going to come back. We're going to have a working strategy, and then we'll start testing and optimizing. So let me go work for a couple hours. I'll see you guys back in a second. That probably won't take me a couple hours, but hopefully not. Okay, so as you can see on the chart behind my head now, there are trades executing. I have built out the strategy. Let's cover what it's doing. So it is buying when the RSI is below 40 and the stock is above the 200 simple moving average. Now, a handful of you are going to look at both of those things and go, Trey, why are you using indicators? As a system trader, we utilize indicators in order to objectify our strategies, right? What did we say at the beginning when we were theorizing this strategy? We wanted to look for reversal trades on strong stocks and scale into them, right? That's great, and that's a great discretionary line of thinking, but in order to build a real objective trade strategy around that, you need to make use of indicators. Yes, indicators by themselves don't mean anything. It's just a way to give real mathematical numbers to your discretionary theory. So that's the strategy, once again, below 40 RSI and above the 200 simple moving average, and it's scaling in up to 5 times. So you'll see here 1, 2, 3, 4, 5 buys. The stop loss is if the candle closes below the 200 simple moving average, so did not get to the stop loss. And the take profit is a close above 45 on the RSI. So we are not looking for a lot of profit with this strategy. Buying 40 RSI break, selling the 45 RSI break, but we are taking up to $5,000 worth of positions. We're entering $1,000 positions each time. So as you can see here, when SPY's trading at 433, if I zoom in a little bit more, it bought 2 shares. It bought 2 more for 4, 2 more for 6, 2 more for 8, and then 2 more for 10 for a total entrance price of whatever that would have been, around about $4,200, $4,300, because that's how much it could afford at the time, right? And then when it breaks above the 45 RSI, it gets out. Let me show you an example of a loss here. So it is buying, buying, buying. Oh, I forgot to mention, I said the stop loss was closed below the 200 SMA. It's the 200 SMA minus the ATR being the average true range of the last 14 bars times 2. So it is giving a little bit of a larger risk to your trades, right? Which once again is something we theorized, but that is how we are going to raise our win percentage, right? By having a larger risk than reward. Once again, all as we theorized in the beginning. So that's the strategy. As you can see on the SPY daily chart, it is profitable. On the Tesla daily chart, it is profitable. On the Nvidia daily chart, it is profitable. On the Block daily chart, which is a fun stock I love to look at, as this stock has gone up and down. I really like to see how my strategies react to a chart like this, but traded it very, very well. Just traded the strength. Hasn't touched it since, is profitable, and on JP Morgan is profitable. I actually struggle to find a stock, even AMC, GME, Micron, what's some other stuff. So I struggle to find a large cap stock that this strategy hasn't made money on. Now, it's not making a ton of money. Once again, we're using $5,000 positions. It's up $3,000 on Micron. It's up $2,500 on Nvidia. It's up $900 on JP Morgan. It's not making a ton of money, but what is the upside to being in and out of trades this fast and to have that high of a win percentage? It allows you to compound very quickly, and it allows you to stay very liquid. You are not holding these positions forever, which means you can continue rotating your money from one position to another. And when you have a win percentage, as I'm going to show you in the back-tested statistics coming up here in just a second, as high as this strategy has, you can scale, right? The advantage that active trading has over investing is faster compounding. Every time you take a trade, say JP Morgan made $100 in this trade, or whatever it made in this trade, the next trade you take, instead of taking a $1,000 position, you can now immediately take an $1,100 position. Say this trade made $30. You can now take an $1,130 position. Say this trade made $70. You can now take a $1,200 position. You see what I mean with how quickly you can compound, and that is definitely the largest advantage of having a high risk reward strategy. But now let's jump into the real data. If you made it this far, you're about to see the real numbers behind this data, and I appreciate you for making it this far in the video. If I bring up SPY, this is the SPY, all the trades, 87.95% win rate, $1,800 up. What was some of the other stocks we looked at? Tesla. If I bring up the Tesla chart, we've done back test for all of these, 93.3% win rate and up $3,800. If I bring up, I believe Nvidia was the next one we wanted to look at. If I bring up the Nvidia back test, 75% win rate. Nvidia doesn't quite get there, doesn't quite get to the 80, but Tesla was just 90, SPY was just 87. Good enough, okay? 75% win rate, give it to me, please. $2,500 up. They're not all going to be perfect, but the most important part, it still made money, right? The next one was Block. I always say I love to look at Block for my strategies. I love to see how my strategies react to a chart like this. If I bring up the Block back test, did not lose a trade on Block. Did not take a ton of trades with 50 orders here. That means it took 25 trades. So not a ton, but on 25 trades, not a single loser. Actually, it didn't take 25 trades because I forgot about scaling. You'd have to count just the exits. So less than 25 trades. Not a ton of trades, but still won them all. $1,200 win rate. And the last one we're going to look at, I looked at JP Morgan so we could get out of just the tech land a little bit. Let's look at a different sector. The JP Morgan back test, 83% win rate, up $880. So we tested a lot of different stocks there. We tested a lot of stocks that, you guys could say, Trey, you're cheating. You're looking at Tesla, Nvidia, SPY. Those stocks have gone straight up. Of course, your strategy is going to win. But that's why when you're testing, you want to test different scenarios, right? We also tested Block. This stock is not strong. It was strong, but it's certainly not strong lately. Strategy still does very well on it. We tested JP Morgan, so we can test a different sector. The banking sector, still very strong, still definitely winning a lot here on JP Morgan as well. A high percentage, at least, should I say. So that's going to do it for this video. And those of you guys that made it to the end, I just want to give you a little bit of extra. I think those of you that are watching my entire videos, you all are the ones that really have the best shot of making it. You're taking your studying very seriously. Don't tell the others I said that, and don't tell the others I'm giving you this coupon code either. If you use code END on my website right now, you're going to get your first month for only $15. So for only $15, you're going to get access to all of my custom coded strategies, custom indicators, custom watch list columns, All of that goodies you're going to get for just 15 bucks. Obviously, you enjoy this stuff enough to watch the whole video. I think it's going to help add a lot of value. I think it's going to help make you a better trader. So check out daytradingstrategies.net. First link at the top of the description. Use coupon code END. With all that being said, a ton of work was put into this video. A lot of different back tests were run. I coded a whole new strategy. Took me a little while to put together. Hopefully you guys enjoyed it. If you did, the easiest way to pay me back, just take the second to hit the like button. I'd really appreciate that. And obviously, if you're new around here, you want to make sure you're subscribed to the channel, as I'm putting out content like this for free all the time on this YouTube channel. With all that being said, I'm going to go ahead and sign out of this video. But if you are new to the Thinkorswim platform, I'm going to link you to my Thinkorswim tutorial here. Go check that out next.